For a look at the local share market now, earlier I spoke to Martin Lakos from Macquarie Private Wealth. Well, Martin Lakos, Wall Street was thumped, suffering its worst session since August. So why hasn't this happened on our exchange?
Yeah, most unusual day, Tiki. We ended up down about 11 points, but let's put a little bit in perspective. Our market's been down 94 points in the previous three trading days now, down 1.5%. So too have been European markets, and so too Asia. So I think last night was a little bit about catch-up for the American markets, having been closed for a Washington holiday on Monday. So now we're all sort of even Steven in terms of performances on de-risking, and it's very much what news comes out over the next few days in regards to the events unfolding in the Middle East. Now, I think that there is still a propensity for the markets and investors to continue to de-risk a little bit over the next week or so until we start seeing things settle down just a touch.
Well, to companies and Western Australian newspapers has been dumped down 14%. Is that all about the Kerry Stokes deal with Seven Media?
Well, it's a combination of what's happening in that deal, and part of that deal obviously is restructuring and a fundraising, or a capital raising, should I say. So it's probably more about the capital raising that we've seen that move down, although to some extent it is possibly a vote by shareholders in terms of what they possibly think of the deal. So there may be some further work to be done by the Stokes Group to convince shareholders to go ahead with it. Interestingly, the Seven Group Holdings, which is the listed entity, was also only marginally down. So investors probably might be of a little bit of two minds in this. Don't forget, Western Australian newspapers got a very large retail shareholder base, largely based in Western Australia. So the Seven Group's got a lot of work ahead of them.
Still with the media, and Lachlan Murdoch to act as Chief Executive Officer at the 10 Network after the immediate termination of Grant Blackley's services. What's the market made of that?
Well, look, the stock was holding pretty well around $1.32 for most of the day. It averaged that sort of level, but certainly got sold down near enough to close, and actually closed down at $1.28, down about 4.5 cents. Look, I think maybe there's a little bit of uncertainty there. Obviously, there might be some management changes, but at the end of the day, we really have to wait and see. What continues to support the share price is the fact that you've got these media professionals such as Murdoch and Packer in there in terms of major shareholding. So we really have to see what develops from here over the next few months and see what Lachlan Murdoch wants to do in Channel 10, leave it alone or reconfigure the business. Engineering
services company Worley Parsons should be going presumably great guns with the commodities boom, but what's happened with the profits?
Well, look, the profit wasn't too bad. It was actually up 7%, but probably what got the market going was the dividend was better than expected, and in particular the guidance was definitely better than expected. There's absolutely no doubt for Worley Parsons that as we continue to see a lift in commodity prices, their activity is going to keep picking up. Now, we've got quite a significant lift in our estimates of the oil price between now and 2013, and as hydrocarbon exploration activity continues to pick up on the back of that better oil price, Worley Parsons is in a really strong position to benefit. So it's definitely a longer-term story, but it's very much about that guidance going forward that the market seemed to like, and the stock was up pretty strongly through the day.
AGL Energy is on the acquisition trail, but has disappointed with its profit release, hasn't it?
Yeah, look, it's a pretty mixed result. The retail side was up about 6%, the merchant side down a bit. They saw a halving of their profits coming out of their investment side. So that's their investments, for example, in the Loy Yang power station, as an example. So that halved to about $20 million. So that was disappointing. I really think the market at this stage is not quite sure what to be doing with AGL. They see the potential in regards to growing its retail business, but they haven't really got a big foothold, and certainly missed out on that New South Wales business, which went to Origin Energy. So I think at this stage, valuations are suggesting that the stock looks reasonably fully priced, and this result was fairly neutral. And I think at the end of the day, investors are really wanting to see some growth and some optionality coming through in that utility space. So be prepared to see that share price do nothing for a while.
Martin Lakos, thanks for talking to Late Line Business.
As always, a pleasure.